Michael Burry, aka, recently made headlines because he placed the bet to short the market valued at over $1 billion. However, it wasn't actually $1 billion that he put on the line. That was the notional value of his bet because he did it through options. So it's probably closer to $25 to $50 million. But is Michael Burry really a one-trick pony? He got his fame from the Great Recession when he shorted the housing market and made a big bag. But what about his calls since then? Michael Burry, prominent figure in the world of finance, is known for his uncanny ability to foresee major market shifts. Again, he shorted the housing crash during the Great Recession, where he made over $1 billion. Over the following years, Burry remained under the radar when it came to his predictions. That it was until 2015, when the founder of the Scion Capital forecasted an impending stock market crash within the following months. However, contrary to his forecast, the S&P 500 actually surged 11% over the next year. 2 years later, in May of 2017, Burry returned with another ominous prediction, this time a global financial meltdown. However, over the next 12 months, the S&P 500 rallied 19%. Then in September 2019, Burry warned of a stock market crash due to a bubble in index ETFs. However, the markets rallied 15% the following year. Then came March 2020. The pandemic marked the revelation of a massive bearish bet. However, the S&P soared by 72% in the next 12 months. Less than a year later, he gave another prediction of a stock market crash due to speculative bubble, coupled with a short position on Tesla. Again, the market rallied by another 16% the following year. Let's move on to September 2022. Burry predicted lingering failures in the stock market, suggesting that the bottom had not yet been reached. Well, we witnessed a 21% upswing over the next 11 months. Earlier this year, in January, the Big Short urged investors to sell, citing his prediction of a recession and new inflation round. Nevertheless, the S&P 500 has recorded a 17% increase year to date. This is kind of what it looks like if you summarize his calls in recent years. Again, in December 2015, predicted a stock market crash in the following months. S&P went up 11% over the next 12 months. May 2017, he predicted a new financial collapse. However, the S&P went up 19% over the next year. September 2019 forecasted a stock market crash due to index ETF bubble, but the S&P 500 gained 15% over the next 12 months. In March 2020, he had a bearish bet. S&P surged 72%. In February 2021, he predicted significant stock market declines. However, S&P went up 16% in subsequent months. September 2022, he forecasted further failures and that the lows hadn't been touched. S&P went up 21%. And again, in January early this year, he forecasted a recession, yet the S&P 500 achieved remarkable positive performance. This is what it looks like graphically. His bet since the Great Recession when he shorted the housing market. December 2015, crash coming in a few months, only to go up over the next 12 months. May 2017, global financial meltdown coming, only to go up over the next 12 months. September 2019, bubble in index ETFs, stock went up over the next subsequent months. March 2020, the lows weren't in, we had this massive move higher thanks to the U.S. government. February 2021, market bubble, crash coming. Stock market went up over the next 12 months. September 2022, more failures coming. We hit the October, November lows. Stock went up. January 2023, recession, better sell. We did get a pullback. Stock market went up year to date. Now his latest call, August 2023, he shortened the S&P 500 and the Nasdaq through the ETFs SPY and QQQ. Based on history, Michael Burry saying essentially go long. So if that's the case, where would you go long? All right, this is the S&P 500 index. And if I just mark off the highs and the lows, with a high of say 4,800 and a low of say 3,600, up here expensive, down here inexpensive. And let's put a line. So red, sell, green, buy. All right, so price has pulled back from this inexpensive area last month. We go down to the weekly chart. You can see that the momentum is still to the upside, just based on the moving averages pointing up. I see a nice area right here, a level of interest. At the 4280 area. You have this rally in price, one basic candle rally out. Prices hasn't come close, but you definitely have buyers a little bit further up from this 4280 level. Say at the 4320. All right, let's go down to the daily chart, and we can see price did break what was resistance, which should become resistance again. So I'm not sure what strike price Michael Burry has, how much time he's given himself. But let's see if this can happen. As we enter September, which is typically September, October, the worst months for equity markets. Let's see if we can bounce off this 4280. So again, I'm not sure where he placed his bets. I believe it would be up, but based on his predictions going back almost 9 years, this will be a signal to go long. We're just waiting for the S&P 500 to go down another 100 points. Thanks for watching. Subscribe. Please like the video.